Hey, welcome to the Closing Beat, everybody. Happy Tuesday to you. How you doing out there? What's going on? Sorry, I missed yesterday. I was traveling back from Winston-Salem. Actually got to see some clients up there. All a good time. We are still planning to do our sort of Gulf Coast tour where we go see everybody there, but had the chance to get out there and see some clients, Baren and Nanenko. That was awesome. Good times there. Good drum corps show. And hope to see you guys. By the way, in a couple weeks, I'll be in Indianapolis for the finals there. So if you're in downtown Indianapolis, you want to say hi, you know where to find me. I'll just be right there, you know, just hanging out along all the weirdos that take over downtown Indianapolis this time of year, actually in 2 weeks. Anyways, we're financial advisors here at Jazz Wealth. Thank you for joining us. Hope you're having a good day. Hey, I see everybody in there. Ooh, got the claps today. I like it. Nice. All right, let's take a look at the markets here because it's a new month. Right, today's the day, August 1st, actually. If we take a look on over at the charts, the S&P, slight little down day today. We've had 5 months in a row of gains, which is kind of hard to believe, but 5 months in a row of gains. We're sitting up here at about 20% year to date without factoring in the dividends there. That's the best, by the way, from January to here, 20% gains. Best year to date gain since 1997. Your boy was in high school, 1997. That's how far back we go there. We have now added, if you can see it, we've now added about $10 trillion since the October low, which is still on the chart, right on over here. So if we take the value of the Russell 3000, so we include everything there, from the low all the way to the high, $10 trillion, another $3.8 trillion added to the market, and we will be at highs. You got softening inflation, strong earnings, especially from the big tech companies so far. And so for July, that was basically a 3% gain. Doesn't sound like a lot, but that is above average. So the market is trending above average there. I do want to point out that I want to point out one other thing before I forget, right? Guess the Dow, right? Let's take a look. Ooh, that looked fancy right there. So that's our winner. Slawomir.
Going with the account credit.
Slawomir went with the account credit there, 35251.13. 35. And for future reference, no dollar sign.
No dollar sign.
So, fun fact, the Dow, it's an index and not something you can invest directly in, so it doesn't actually have a dollar sign. There are points, 35,251.13 points. And I love the graphic there. Who knows? Who knows where that graphic is from, man? That is super cool. That came out really, really well. Okay, I got distracted there. Wow. Took me back there. Remember, did everybody watch that show? Man, come on, man. That was a good show. They should bring that show back. You know what I mean? Now, the numbers are probably too big. Can't put them on there anymore. Anyways, what I was pointing out was the small caps have been a lot of the reason for this last little boost in the market. We would say the breadth of the market has widened. So remember before we were saying very narrow breadth where only the top 7 or 8 stocks were really lifting the market. Well, what's done it now, and I've shown this before and I'll show a little bit more here today, is the rest of those small cap 600. If you look up that index, you want to look at that. The small cap 600 actually beat, you would call maybe like the S&P 50, like the top 50 stocks in the S&P, it beat that by 2% in July. So time to start looking outside the headline, popular kids type names there. You know what I mean? It's Tesla, I'm going to invest in that. You got to look outside of that. That's where all the action's going, and we're going to talk about that here in just a second. Every sector, by the way, did well and had a positive gain through July. I would point out that the energy sector really led the way. Kind of a strong reversal considering what we had back down in here. We had losses last quarter, so far going on so good there. And I want to point out volatility, extremely low. The volatility index, let's go over there and look at that, staying right at 15. So it's nice to see that if you don't like a lot of volatility in the market. However, historically, when the market has such a large gain through July, August tends to be a little bit bumpy. I'm not saying crash or anything like that, but historically that is the case when we have this rocket ship head start going through July. You look at August, there's been people on TV that have said this as well. August tends to be a little bit back and forth, and well, kind of, like clockwork. It's already factored in there. So pretty cool there. Now, keep in mind that we're now starting to use the word soft landing a lot, or at least the Fed is and analysts are and stuff. And remember that that's largely priced into the market. Okay? So when you look through here, everybody expecting that the Fed was doing a good job raising rates, and so they were willing to take risk. And that becomes really evident when you start looking around the market as well. The NASDAQ composite, I should say, I'm showing the NASDAQ 100, but the NASDAQ composite is almost about to hit its best year-to-date start in 50 years. 50. So I've almost, if this market goes just above highs, the NASDAQ composite, if it goes just above highs, then even I am not old enough to say that I have seen a year-to-date start that aggressive. Certainly studied it, but not have been alive for that. 5 straight months in a row for gains there as well. That's not odd, by the way. The NASDAQ composite having month after month after month of gains in a row is very common. Not even the record, but if you want to look back to the last time we had something like this, you're going back to just 2021 to find 6 months in a row of gains. So a little less common there for the NASDAQ. S&P right on cue, basically, as August starts here, tends to be a little bit flip-floppy, a little bit of weakness there. We're not seeing much. It's not much so far, but it's only one day. And I do want to point out that the best performers, how do you say it? The best outperformers in the market continue to be those that are not the popular kids. Microsoft, JP Morgan, the names that you would know if I mentioned it, and you probably would even know the ticker symbol. If we look outside, did I save it for you here? In July, just in July, let's go over here. First up, there you go. And now this is recently as well. But you look at quantum computing, and I call them quantum computing, but it's not the name of their company. You have to read what they do. Just go read what they do, right? If you're interested in trying to figure out what this is. It's a biotech company, but just try to figure out, read the description of what they do anywhere, Yahoo or whatever you want to look up, and try to figure that out. Eurogain Pharma. Same thing. Last couple days, just taken off here. It is one of the best performers through the month of July. These guys, always interesting to me because they don't make money, first of all, but they take a drug, apply it to an existing cancer drug to try to improve the cancer drug. So they don't make any unique kind of drug. They just use it in conjunction with an existing cancer drug, all of them, to try to make them better. That is their claim to fame, and they don't really make any money there. Cheaper stock here, Dragonfly Energy. You may know them if you've bought batteries or bought their branded batteries through for an RV or like a boat or something. So a little bit interesting there. They all lose money, right? So all of them. Even year to date, by the way, the best performers, BTBT. It's a Bitcoin miner. People still doing the Bitcoin thing. Best performer year to date there. Notice how you've never heard of any of these names. Cipher Mining, they do the same thing there. These are more like, if I remember right, they're more on the data center side of things. They don't actually do the mining there. Ionic, there you go. New highs, actually today, fresh new highs here today. Also in the quantum computing space there as well, but true quantum computing. I wonder why they're doing well. AI, sound familiar? Applied Digital here as well, data center company, and Upstart. These guys take loans. There's kind of like a algorithmic way to process loans if you're looking for a loan there. By the way, they all lose money. So what does that tell you? I just rattled off a bunch of names that are the best performers that you maybe haven't heard of besides Upstart. And they lose money, but yet they're like triple-digit gains here for the year. Carvana. Oh, did we do Carvana? Yeah, I'm happy to see this one. But Carvana, that's actually the best performer. What in the world? What's going on? It tells you that when you look at the stock market, people are believing that this will be a soft landing. If you believe that there will be growth of any kind or there will be no recession, right? Really calm, easygoing, what do? You take risk with your money. And since you can't buy real estate because it's super pricey still and interest rates are high, what do you do with your money? You invest it. Well, I don't want to invest in the stuff everybody's heard of. They're all doing well. They had a great run. I don't want to participate in that. I want to participate in things that haven't performed well. That's the mindset in the market right now, and that's kind of a visual way to be able to see that. So hopefully that helps you. You'll learn a little bit there. I do want to point out Raytheon Technologies, again, why you don't buy on the first day of the move there. That continues to go well. And Solar Edge, the difference between having a first day move. We talked about this last week. First day move and a gap down reversal move. Look at already, right? Helping you out there. So looking better there in the short term, but two different types of technical patterns that you can look at where you go, well, one, I'm not going to fall for. The other, I'm going to maybe kind of rush into and, make sure I don't miss it there. Big difference, right? So I like pointing those kind of things out. Let's talk about some stocks in the news here while we get things fired up. You may have noticed JetBlue. JetBlue, as far as the other airlines, when we compare, because we can compare them to other airlines that have reported already, their numbers were a little bit weaker, and they happened to kind of kick themselves in the butt just a little bit because they said, what we're seeing is this pent-up demand for travel is now shifting to international travel. So everybody that wanted to get out and travel after COVID, they did the U.S. stuff and went and saw the thing, Grand Canyon or whatever you're out there looking at. And now the demand is shifting towards, I'd like to go back to countries that maybe I'm available to go to now that are open. Is that good news or bad news for JetBlue? Why would you say that? You're not required to say that, but they did say that, and that's what hurt the stock here today, if you ask my opinion. Marriott happened to say the exact same thing. They said that if you look at their global global average revenue per room, global average revenue per available room night. That's how they say it. I track this stuff so you don't have to pay attention to that. That was up 1%. And then they said the same comments. Oh, travel is shifting towards overseas now. People aren't staying as much in the U.S. U.S. travelers they're booking hotels outside the country. The only difference is they're making money from it, right? So there's the difference between JetBlue and Marriott. Put those two pieces together on an earnings day and you go, oh, okay, JetBlue, they can't quite compete the same way. That's not their shtick overall. Merck. It started off strong here today, finished weak on the day there. Gardasil, which is the HPV, and I don't know if that's if you have it or if you're gonna not try to have it. I don't remember, but Gardasil is one of their popular drugs. And Keytruda, which is the breast cancer drug, both of those absolutely killed it. And they said, that's gonna continue. We're gonna continue to kill it there. One that I thought was fascinating was Caterpillar. Remember, soft landing. See all the pieces add up here. People are saying now, well, if we're going to have a soft landing, I want to invest in aggressive stuff. I want to take my shot on some things that have been beaten down that maybe wouldn't have done well if we had a recession. What would have not done well if we had a recession? These guys. Who's buying the bulldozers and the scoopers and all that stuff to build stuff if things are slowing down? Well, they're not slowing down. Caterpillar beat by 22%. So take the average analyst estimate, or other words, they'll sometimes say consensus, if you want to sound educated. They'll say consensus estimates. They beat that by 22% was the magic number there. Revenue beat by 6%, also very, very good there. Total sales, very good. And they said, hey, the margins on these big expensive things that we paint yellow are expected to remain higher than even we expected. Things are that strong. So really good for them there. They also saw higher overall sales volumes. Essentially, anything you can say good in an earnings report, they did it. Just really good. And kind of Uber too, but not as much. So Uber reports earnings as well. Better than expected there. Moving towards the official profitability standpoint there. They get the Broken Record Award, in my opinion, because they happen to say the same thing that they've said over the last 6 quarters, which is basically, we missed, but we're seeing higher bookings, and our run rate towards profitability is good. Earnings before interest, taxes, and amortization, EBITDA, if you want to say it that way, was like almost $1 billion. So they keep saying, we're getting there. We're getting there. More and more bookings. Everything's happening. It's going to be great. Don't you worry. Show me some profits. Right? And people obviously believe that that's something that's going to happen or getting closer to happening. And the stock is obviously doing well. All right, as far as earnings coming up throughout, well, let's do tomorrow. Let's just go one day ahead here. You got CVS questions like Merck. If you look at Merck from today, their comments I didn't mention before. The COVID side of things, not so strong for us anymore. It's a shame. Wish that thing would come back. That's essentially what they said. So a little weakness there, but don't worry. Keytruda and Gardasil took care of it. Well, CVS coming out tomorrow with their earnings as well. They've been on a pretty good performance streak regarding earnings, so we'll see what happens there. Johnson Controls, Kraft Heinz, if you're looking consumer staples. You've got Cognizant, DoorDash, Goodyear Tires, and then after hours tomorrow, MGM, Occidental Petroleum, PayPal, will be the focus there. Qualcomm and Shopify. And I stutter because I was looking. Occidental Petroleum tomorrow has the worst performance over the last 8 quarters. So 7 of the last 8 quarters down on the earnings report there. Down on the earnings report. Down on the earnings report. So we'll see. Diamondback Energy was in there as well. If you follow the energy space, overall earnings weaker than had been expected. Revenues better than expected. But of course, look over here. Dude, look at the reversal in oil. Remember we talked about this the other day. I always mention this in oil because I've been stung numerous times. You don't go counter trend on oil. Let the trend develop and you will be rewarded for being patient. But if you try to go counter trend on this, like you tried to short this now, oh, you better be quick, man. You better be quick. Also, last week, our Jazz After Dark, we talked about the Roth IRA 5-year rule if you're getting divorced. How does that work if you're giving money to a spouse out of your Roth IRA? For retirement expenses, you absolutely must include in your retirement plan if you're doing that. And an exact breakdown of how do you work this out? If you're trying to buy a house or deciding on renting, and you're looking at every single metric there, how does that actually work? Instead of just being that guy that's like, you're wasting your money renting. Really? Can we find an example where that's not true and include everything? We'll see. All right, I'll take your questions here if you have any questions. Otherwise, get out of your way. Press your luck. Tom was a fan. Tom was a fan. MW, don't you have videos from years ago saying you can invest directly in an index and don't have to pay any fees? That is true. You can actually invest directly in an index. You're just not, the index is not calculated on dollars, it's points. So it's not for example, what you see on TV, the Dow is at 35,000, blah, blah, blah. You're not investing in that. You can invest in the index without using an ETF or anything. So that is true. You're taking me back there a few years, huh? I love it. Love it. Sweet soft landing. You're going with that too? Buy the Mega Millions. I need to do it anyways. I had $20 in my phone. I have a little thing on the back where I keep this. And I had every intention of keeping that $20. And it, over the weekend, the $20, it got away from me. So I do have to go get that to play the Mega Millions. I owe it because we won 20 from the Powerball when The Office played. So I got to use that money towards it. That $20 I happen to spend. We're looking at a short squeeze on Yell. Oh, yeah. That would be a good definition of that, especially being the price of that particular stock. Yeah, that would be a good guess. Alibaba, you want to buy it. Okay. Well, in the ultra short term, there it is. In the ultra short term, it's like, for me, I agree with the idea of maybe having a longer term view on it. But in the short term, buying it right here after just this one little down day, I'd put it on a watch list. Say, okay, give me a pullback. Let's have some down days with the market, or more importantly, some down China market days. And okay, I can work with you there. You sold some puts, Tom, on some Halliburton. All right. Oh, I hope it was to play oil. Oh, you sold it on Friday. Okay. Strike price 38. Sounds about right there. September. Do I have a problem with that? No. What'd you collect? $1? 38, expiring September 1st for $1, possibly. I'm going to guess. You say puts, but then you said premium $1. So I'm a little thrown off by that. Let me just look over here real quick. September 1st. Yeah, you got $1, especially if you did it on Friday. All right. Yeah, there's nothing that says you should be fearful of oil just falling apart here. Wednesday, which is tomorrow, will be your biggest day with the inventory numbers. So it could be the most volatile tomorrow. After that, Wednesdays are mainly your focus. Yeah. Probability of a 10% pullback in different sectors. That's a good one to put. I don't know off the top of my head, but that's a good one to put together. We can do that. So let's put that here. We'll have a little reminder. Vertex, pretty solid earnings. They seem consistent. You're right on the first part there. Consistency, maybe not so much. Well, I should say the volatility in their earnings is not very consistent. Consistent earnings, of course, is. So no problems with that. I like that one's pulling back too. Just not in my space. I do study it. I just do not participate in that one in particular. Biotech gets me. You want to invest in emerging markets? India. There's also, is it PIN? I think that's the most popular one. PIN is the most popular. It's by Invesco, if that's something that interests you there. I don't know the difference between PIN and if the other ETF there maybe weights a little bit different. I'm sure they do. But that one I do not know. Yeah. Sorry about that. But I do believe that's the most popular one, which is not amazing. 95,000 shares today. You know, I may be wrong on that. I may be wrong on that. So let me look into that because, yes, you're right. iShares is more popular, but there's got to be just a weighting difference there. Yeah, sorry. Sorry, I couldn't be more help on that one. I was always used to looking at PIN, but you have maybe enlightened me there. And then I go to AT&T. Thoughts? What do you mean thoughts? What do we got? Thoughts on that one? You like the idea of buying a discount there? And I missed some questions. Let me go back. You already own Albemarle. Okay, so a little bit wild there. Thinking about adding tomorrow before. Ooh, I would never do that. So given the choice, I would never add before earnings. I can't say that I have some stats on whether that was a good thing or bad thing. Just given the known volatility event, if you're an options guy and you want to add to it anyways, why not maybe sell a put, get a little higher premium than you were expecting? Buying stock outright, I can't say I would do. You have a $12 expected move on Albemarle. I don't want to be the one that guesses that tomorrow is the best time, right at the close there's the best time to buy, hoping that it somehow goes up. So maybe use options, but that's about as far as I would go with that. There's the answer on T. Is it a good value at 14? So, well, value is not timing. I shouldn't say timing. Value is not price, right? So a good value for it being discounted, okay, I agree with that. Is this the moment to buy it though? Right, so you can have a watch list and say, these are good stocks I think are a decent value, but I'm not sure that it's time to pay that price right now. So that's where I would be on that one. I wouldn't take the shot that tomorrow magically creates the low. I do think the low will be before this low. I think it will end up being a higher low in here. I just don't know that it's tomorrow or whatever. Yeah. Is it a terrible idea to have international ETF in a taxable account for tax reasons only in international ETF? Yes. I highly doubt you have just that, right? Good. A little bit of diversification there. Yep. Oil is trending up, but energy is a low performer after rate hikes are complete. What wins? What do you mean energy is a low performer? It's an underperformer compared to tech and all that stuff, of course. Oh, I don't have my slide up there. But in July here so far, since oil started rallying here, energy is the best performing sector. Beats all of them. Yeah. There's the weighting difference. Thank you, Tom. Oh, and you're the one that asked the question. Yeah. There you go. 50 India tracks market cap of 80. So a sizable difference there. All right, I like yours better. You win. In your case, you would win. I'm sorry I brought up PIN at all because that won't fit. And that would not be a good use in a taxable account. I love it. I love it. I love it. What else do we got? Got your oil inventories tomorrow, and the other one was I keep thinking. Costco. Costco's sales numbers will come out tomorrow as well, just as a part of their updates there. It's an overbought stock, though, already trending lower. So we'll see. Their numbers have not been as strong recently. Remember, Costco went on a run for a while there. But those are the two main things coming out tomorrow. As far as outside of any inventory numbers or anything else like that. So give you something to focus on there tomorrow. Yeah. Oh, yeah. Dustin says, you thought Eric taught that the energy has the lowest performance following energy. Oh, you're asking after energy hikes. Oh, you're not saying like now. I know what you're looking at here. I misunderstood your question. So here's the sector returns following, this is what you read, following energy, rate hike completions. I don't know. So if you look at that one, it has the worst median performance overall, only being positive 33% of the time looking back through the 6 that we actually can track there. Sorry, my mistake. That's what you were looking at there, and that would be correct. So don't smack Eric just yet. Eric was just using my data. He helped me out with the letter this weekend as I was out of town. All right, I will wrap it up there. Appreciate you guys all hanging out here today with us. I will get on to doing the work that we do. By the way, if you haven't watched our sort of weird podcast that we do on Fridays, this one's going to be good this Friday. They're all good, but we're going to focus on how I'll beat you every time. And I'm going to actually show you. I'm going to build a portfolio and show you how it's inefficient, and I'm going to show you what I do to make it efficient. And no question, no randomness, no opinions. I will show you how it beats it. I'll just beat myself making a portfolio, and I'm just going to randomly do it. So we'll go through that. We're going to talk about the efficient frontier and how portfolio managers use that as a guideline in terms of beating their competitors. So I will go through all of that so you guys can see sort of how the hot dog's made, right? So we'll kick that out on Friday. Enjoy the rest of your evening, everybody, and thanks for watching. Adios.